So, good morning, ladies and gentlemen. It was lovely to connect with you yesterday and this morning. And yeah, there's a lot of chat about digital transformation, AI, e-invoicing. And I know it gets a bit overwhelming. I've been in tax technology now for the past 10 years. Digital transformation has been very close to my heart. And it's been really exciting to see how clients are transforming their environment, how they are being at the forefront of tax automation, but as well as challenging whether the tax authorities are doing the right things at the right time in order to make it a bit seamless for taxpayers as part of transformation. So I've been given the topic which says embracing the rise of digital economy and leveraging technology for tax administration. And what I will be covering in my presentation is not just how you as an organization can be tackling digital transformation, not just AI, but as well as what are the tax authorities doing, what are the models that they are governed by in order to ensure that everyone gets on board with the digitalization in today's environment. Okay, so I just want to check if my presentation is good to go. Alrighty. Now, Kavita spoke a little bit about Tax Admin 3.0. I just want to have a hands up. Has anyone read Tax Administration 3.0? Have you read the paper that was shared by the OECD? Maybe if I can just get a hands of who has looked at it. Okay, so very few hands on it, but not a problem. I will be giving you insight into it. But before I go into Tax Admin 3.0, maybe just a little bit of context. So Kavita as well as Shrenik spoke about one of the recent global tax surveys that we've done. And like Kavita mentioned, there was a lot of chat about digital transformation and how organizations should tackle it. But one of the interesting things that I read as part of the feedback from the finance executives and tax executives was around whether digital transformation such as e-invoicing would make life easier from a compliance space. Would it actually give the transparency? Or will it complicate compliance? There were very mixed views because, of course, digital comes with a lot of costs. It comes with a lot of scrutiny, as well as just having to do more reconciliations within your organization. So I found that very interesting because while there is a definite drive towards digital transformation, organizations are skeptical whether revenue authorities are moving at a very fast pace without thinking about the practicalities that it can do for the organization and some of the burden that it places on the organization as well. Now, if we look at Tax Admin 3.0, governed by the OECD, it came out a few years ago. And the ultimate aim of this Tax Administration 3.0 was to provide guidance on why is the Revenue Authority digitalizing? What is their thought process about it? But also giving a little bit of comfort to taxpayers on how can it actually benefit you to embrace the digital age that we're undergoing. Now, one of the themes that came out of Tax Admin 3.0 was that actually it should be a win-win for the taxpayer as well as the tax revenue authority. And the way that they see it is that, yeah, going on e-invoicing, bolstering their collection systems will bridge the revenue gap. And that will be achieved by getting more transparency into the data that is coming not just from the large taxpayers, but from the middle and small taxpayers that are maybe not always compliant and reporting in what they should do. The other angle, in terms of the win from a taxpayer point of view, is that currently now, a lot of tax authorities in Africa are manual, right? The way that they collect from taxpayers are manual, the way that they ask taxpayers to submit are manual. In a lot of countries, not a lot of tax authorities even have the e-filing system, which puts a lot of burden on taxpayers to be able to comply on time, and that physically means driving to their offices, trying to file a return. So they view the sort of rationale behind digitalization that they want to create efficiencies, they want to create seamlessness for organizations, they want to be able for taxpayers to be encouraged to interact with them, and that's the idea behind moving towards a more digitalized environment. I know there's a lot of mixed views. I mean, we had amazing conversations yesterday on how do you do it in a very practical way for taxpayers so that they do reap the benefits of having a seamless environment? They do see the benefit of getting their VAT refunds on time, but there's a balance between what do you enforce and the timelines that you put towards it. And I think the revenue authorities are still trying to figure that out as well. So we know where we want to go, but it's a journey, and they acknowledge it within Tax Admin 3.0. I just wanted to mention that there is an amazing paper around Tax Admin 3.0. So what we will do is we will try to share it with the participants after this, maybe circulate it with you via email, share with you the link. It's a really exciting read, gives a lot of thought into it. So I really encourage everyone to read up and have a look at it. Now, one of the areas that Tax Admin 3.0 covers, as well, is the evolution of where has the tax authority started in terms of connecting with the revenue authority, and what are they trying to change now with Tax Admin 3.0. Now, when 1.0 and 2.0 came out, the thinking behind it was just to put some form of digitalization that taxpayers can connect with. And what a majority of the revenue authorities then have implemented is robust e-filing systems, robust payment platform models, so that it just becomes a little bit more seamless for taxpayers. However, they are of the view that that is not sufficient any longer. And their sort of rationale behind it is that while there's a process of you interacting with the tax authorities, where you are able to, communicate with a dispute or communicate with a tax authority agent, tax is not integrated throughout the organization in how it should. And as a result, tax is always an afterthought, even when it comes to interacting with the revenue authority. So what they are trying to do with Tax Admin 3.0 is essentially make tax more real-time. And they believe that if they implement e-invoicing and some of these practical digitalization models, as well as AI, what they will do is not only ensure seamless communication with themselves in what you are sharing as an organization, but you will also then be forced to ensure that tax is embedded more real-time in your organization across your functional areas. And that speaks to what Swasti said, right? Tax can't be left alone. Tax needs to be a strategic consideration across the organization. Tax needs to be a strategic business partner. And the tax authorities believe that by doing more real-time reporting, they are not just going to encourage better compliance, but they're going to ensure that tax is top of the agenda for the finance function as well as for the rest of the business organization. So a very interesting view on what are they trying to achieve with this. Now, one of the areas that has been a big buzzword is e-invoicing. And in my slides, I will take you through how we're approaching e-invoicing, how we see organizations approach e-invoicing, and what does it really just mean in terms of your day-to-day activities. So just to quickly end on Tax Administration 3.0, these are sort of the fundamentals that tax authorities are trying to drive. They want it to be more data-driven, get more visibility into the data of organizations, and they also believe that if they force this, you will take your control over your data. There's a lot of moving parts to tax, and tax, unfortunately, still is sometimes an afterthought. And through the structure, they believe that getting better control of your data will empower you as a tax function as well. The other sort of rationale behind it is just in terms of intercompatibility of systems, right? Tax is still a standalone, systems for tax are still a standalone. How do you integrate that within the wider organization? And Tax Admin 3.0 gives a lot of guidance into that. So I'm going to stop on Tax Administration 3.0, but essentially, whatever the tax authorities are doing now, they are governed by a model, and that model has been set by the OECD in terms of their future, their vision. But what I would like everyone to just take away out of this is that it is a journey, right? Tax authorities are trying to figure out, they are chatting amongst each other in order to determine what is sort of the best way forward. And it's important that as a tax function and as finance and tax executives, that you sort of also understand some of the benefits that could come with digitalization. And that's really set out as part of Tax Admin 3.0. Okay, now, there is sort of a buzzword in Europe going on at the moment, and it's called VIDA. Has anyone read about VIDA? Have you heard about VIDA? Is it something that you've seen come up? Okay, I see a lot of buzzwords from nobody. All right, so VIDA means VAT in the digital age, right? And there are different sort of reporting structures that sit within the VIDA framework. And all of it is starting with e-invoicing. Now, what the revenue authorities are trying to achieve with e-invoicing, yes, get access to your data in real time, yes, understand what you are paying as an organization, but actually, they want to take it a step further and tell you as the taxpayer what you need to pay. Pretty scary, right? So gone are the days where you file a VAT return, and come month end, and you sort of now trying to work out what you should be paying the taxpayer. Is my data accurate? Oh my God, the accounts payable team has deducted a lot of entertainment expenses that shouldn't have been deducted. We've had time over the years to be able to put proper processes in order to ensure that we're paying the revenue authority the right amount. However, a lot of those processes are manual. Now, what the revenue authorities are doing is that they are forcing you to take away those manual processes. They are forcing you to get better control of your data, like I mentioned. And in turn, they are automating the VAT return. It's not a European thing. So we've recently seen in Kenya and Tanzania where the revenue authorities have implemented e-invoicing. It was a journey, so they started with the fiscal devices. They then went into what they called virtual fiscal devices, which was sort of your system integrates with their platform. And now they've taken it a step further where they actually are automating your VAT return. They're taking it in another step to say, well, if you do not receive compliant invoices from your suppliers, we will pick it up because it will not come through the e-invoicing platform. And in turn, taxpayers, you cannot deduct input VAT, as well as you cannot deduct your expense from a corporate income tax perspective. So the VAT in the digital age is really connecting every part of a business ecosystem, how you interact with your customers, how do you interact with your suppliers. They want to be at the forefront of getting their data and being able to tell you as a taxpayer what you need to pay. So that is sort of what's happening in terms of VAT in the digital age. It's not e-reporting, because e-reporting is, I've had a sales transaction, I report it to the tax authority. VAT in the digital age is going more real time. So taxpayers getting access to your data real time, pre-populating your VAT returns. And what then becomes important as an organization is to what Kavita and the team mentioned, which is around leveraging solutions such as AI to be able to reconcile your data in real time, to be able to analyze your data in real time so that you're at the forefront of understanding your compliance before the tax authorities get an understanding of it. Right. I just want to pause. Any questions so far? Now, one of the areas that I just want to make a connection on was the digital services tax. There was a little bit of discussion around it yesterday in terms of where revenue authorities are trying to ensure that a lot of the big fintech companies, a lot of the big mobile platform companies, social media companies are paying the right taxes in the country. How are they sort of analyzing this? So how are they actually ensuring that all foreign transactions should be accounted for correctly and likes of Uber, Booking.com, Salesforce, that they're paying the right amount of taxes? The way that they are doing it is through platforms such as e-invoicing. So they are putting out mandates of not just local transactions going into e-invoicing, but as well as foreign transactions. And in that way, the tax authorities are ensuring that you are paying the right amount of taxes. And they have then been sort of targeting a lot of the big companies in order to ensure that they pay the right amount of digital services tax. We're seeing it in Kenya, we're seeing it in Tanzania, South Africa, which is coming not fully yet on digital services tax, but electronic services. We're seeing the evolution of just tax authorities able to understand all your transactions and ensuring that you pay the right amount of taxes. Okay. E-invoicing. I know we haven't touched on this a lot. There's been some buzzwords yesterday. Can I just quickly ask, who has implemented e-invoicing in their organization? Okay, a lot of hands. And what has been your experience? Seamless, terrifying, frustrating, I don't know what's going on, it's an IT problem. Swasti says it's an IT problem. Very disappointing, Swasti. It's all of the above problem. So invoicing, a very big buzzword that's going around. And yeah, it's been interesting, right? So what was it? I mean, I've mentioned I've been like, 8-9 years in my role. And when I first heard about e-invoicing, I was like, oh, this is so far-fetched. It's never going to happen. Where would the tax administration get funds to do this? Yeah, it's a thought that is still coming. 5 years down the line, nearly most revenue authorities have adopted e-invoicing. And yes, they've stumbled and perhaps scratched along the way, but sure, they've done a pretty good job in some of the countries, and it's shaken up the economy in terms of what the tax authorities are actually doing with the data. But we talk about e-invoicing, and what I've realized is that not a lot of people actually know the practicality about e-invoicing. You know, is it an electronic document that the revenue authority just approves? Does it mean that the revenue authority raises the invoice? What is e-invoicing? So we've put together a very practical slide in terms of explaining to you e-invoicing. And I've taken an example coming out of Zambia. So Zambia was one of the countries in Africa that has recently adopted e-invoicing. But they had taken it a step further, which I've not really seen come out in a lot of the markets in Africa. So basically what the revenue authorities do is they give out a technical spec. And I'm sure that when you first read that, it's like, okay, this is for the IT guys. What is going on here? But essentially, they sort of lay out the data fields or the data touch points that they would like to see on a real-time basis. And what they do is, as a revenue authority, they set up an e-invoicing platform on their side, but they set it up in such a way that it has a lot of data analytics. It needs to be compatible with a lot of data coming out of different ERP systems. So they then usually put out quite a detailed spec on the format of the data that they require so that it can be eventually compatible with their system. Now, what the Zambia Revenue Authority had done was, they didn't just want sales. They wanted purchases, they wanted stock movement, they wanted imports. And the idea behind it is that they want all of this data in order to be able to link a customer transaction with a supply transaction and eventually tell you what to pay. So how e-invoicing works is that you have data coming out of your systems. Sometimes organizations have multiple systems, so it becomes an IT discussion of how do you get the data to the tax authority. But ideally, they're looking at very specific fields that are coming out of that system. So your invoice number, your tax identification number of your customer address, your VAT rate, your time of supply, your billing document type. So very, very specific fields that you would see, like, for example, in SAP or Oracle or Microsoft Dynamics. What that happens is that they want it real time to go to them. So when it means real time, is that as you are typing or recording a transaction in your system, the revenue authority gets it in real time. Now, what they're trying to do with that is validate your information, but the implications of not getting that transaction flow correct is very big and fundamental for an organization, because it can actually stop you from invoicing your customer if you haven't adopted e-invoicing correctly in your organization. It basically stops. They do not allow you to invoice your customer, and that means you get a lot of unhappy customers and a decline in revenue at certain times. Now, what becomes critical as part of this is not the technology, right? And it was a very interesting, because someone mentioned it yesterday to say, it's not about only the technology. It's about the people, the process, and the data that complements the technology. Now, with e-invoicing, what becomes critical for you as an organization is to be able to have comfort on the level of data that you send into the tax authority. So yes, setting up the e-invoicing structure is important. Having a reliable e-invoicing provider is very important. But where you as an organization can take control is around the quality of your data. So a lot of organizations are looking at processes, they're looking at the decisions that their teams and their functional teams in finance are making around VAT, withholding tax, corporate income tax, but they're also looking at how they can digitalize in their environments. And one of the areas that organizations have really taken on as part of transforming their data is that where the organization is going onto a new ERP system, or onto a new version of an ERP system, they've taken on the opportunity to be able to digitalize some of the decision making within those ERP systems, which ultimately then give them comfort on the data that's coming out. And that's where AI comes into place, right? So sometimes you're not going to move out of your current ERP system, but you actually need a form of mechanism or solution to be able to read your data, analyze your data, make sure that it's at the right quality. And that's where some of the adoption organizations are taking into in order to get better control over their data. Okay. Right. So maybe just to touch on, and we will share these slides because I know it's a lot of information. Now, there are different models of e-invoicing that revenue authorities are looking at. Some of the revenue authorities are not going full-blown where they are able to validate your data or tell you what you need to pay. They are going through a journey where they are sort of walking baby steps in getting organizations familiar with e-invoicing. Some countries, like Kenya, Tanzania, even now in Nigeria, a lot of the revenue authorities are going small, so because they realize it's a change management, it's a different adoption for organizations. Other revenue authorities are going full-blown and just implementing a specific type of e-invoicing model. But what this sets out is the different types of e-invoicing models that the revenue authorities are going. One of the e-invoicing models that we find, which is still a little bit on the simpler side, is post-audit. So what they're encouraging is that the interaction is between yourself as a customer and the organization. And the revenue authority, yes, does sort of set out specific rules on how you need to send your data, but it's not validated by the revenue authority, right? So they implement an ecosystem for you to communicate more real-time with your suppliers and your customers, but they do not actually validate it. So that's the first step. The common sort of e-invoicing model that we see with the tax authorities is hard clearance. So a lot of the tax authorities are there now, and what it means that besides you just sharing the information with your suppliers or your customers, you're sharing it in real time with the tax authority, and the tax authority is validating and clearing that information in real time and giving you the clearance before you are able to share it with your customer. An interesting thing from a South Africa point of view, so in South Africa we do not have e-invoicing, but the South African Revenue Services put a discussion paper out, and they are looking at something known as PAPL. Has anyone heard of PAPL? Okay, so PAPL is sort of a common it's sort of like a common communication language or platform. And what it entails is that once e-invoicing set up, we've seen it now in Belgium, once e-invoicing is set up, your supplier, for example, needs to sign up to the PAPL network, and they need to share their supplier invoice with you via the PAPL network. Now, what that does is that instead of you, from an organizational point, having to reach out to your supplier, follow up or chase for an invoice, all transactions will become available real time for you as an organization to have access to, because those suppliers will be governed in order to share their data via the PAPL network. So tax authorities are taking it a step further. But one of the things that is coming out of there is not just that, yes, you have to share your data in real time and they need to validate it. It does also create efficiency within your ecosystem. Because instead of you having to chase up that supplier, get an incorrect invoice, chase up for a correct invoice, your supplier will be governed and be required to share a compliance invoice, and it will come through a certain network that you will be able to access to. And that's sort of where, example, the real-time reporting and the VIDA solution that I spoke about is creating an ecosystem of communication amongst different channels. And in return, what that does is improve your supply chain process, improve how you communicate and invoice your customers, and ultimately improve the refunds that you get from the tax authorities, right? Because if all suppliers are having to give compliant invoices and put it on a certain network, then you're almost guaranteed that the revenue authorities are not going to question your VAT refund at the end of the month. And that's what they're trying to achieve with these different type of models. Okay. So what are some of the benefits of e-invoicing? Yes, it's very costly. Yes, you have to sort out your data, which can become quite daunting, as well as a bit overwhelming, especially when you are hit with e-invoicing at the same time for multiple countries. But there is a plus side, and that's really also what the Tax Admin 3.0 speaks about, is that e-invoicing in time will reduce cost, right? We're going to move away from a paper network. We're going to move away from the lack of efficiencies in terms of how we communicate with our suppliers and our customers. And in time, that will save cost. Efficiency gains, 100%, right? So while e-invoicing has been quite a cumbersome process to get it up and running, there's a lot of efficiencies that organizations are finding with e-invoicing. And it's just forcing them, right, to be able to set up the correct processes, the correct structures, and they have seen benefits, not just from a tax authority side. Faster payments and improved accuracy. So my example from a supplier point of view is that, yes, when an organization, suppliers now are invoicing you, they will be able to, I'm getting a sign to wrap up, they will be able to communicate more seamless with you as an organization. I just want to touch on one last slide, and that is, how do you as a client focus on something like e-invoicing? So, is it an IT problem? Is it a tax problem? And the question is, it's a business problem. So what this picture really shows is that Tax Administration 3.0 will be installing different types of digitalization platforms that you as an organization will have to comply with. E-invoicing being one, real-time reporting being another, and in some cases, automation of VAT return, which goes further beyond e-reporting. But what is important, and that this diagram is showing, is that there are fundamental dependencies of ensuring that you as an organization can be at the forefront. On the one side is the data, the technology, the processes. That is critical. For you to be able to implement successfully, you need to take control over your data, you need to be able to streamline your processes, and you need to have a very good technology solution that will support you with e-invoicing and be able to standardize e-invoicing in the multiple countries that you operate in. On the other side, it talks about who plays a functional role when it comes to e-invoicing. And what this sort of paints out is that your functional team, your accounts receivable and your accounts payable play a very critical role in ensuring that you are able to successfully implement e-invoicing. So your AP team, they need to be onto your suppliers if they haven't complied with e-invoicing, because ultimately it impacts you. Not being able to deduct VAT, not being able to deduct your expenses for corporate income tax purposes. AR plays a pivotal role, right? Because if they can't invoice their customers, they're going to go somewhere and shout, right? Because it's affecting their supply chain process. And then, of course, talent and change management is a very critical part. Unfortunately, we haven't touched a lot about change management, and it will come out as part of the breakouts. But as part of all of this, it's important to understand how is it changing your organization, and how are you equipping your organization for change. Not just from an organization point of view, but tax authorities need to think about change management with the whole change that they are implementing across taxpayers. All right, so my time is up. I'm very passionate about this. I sometimes tend to go over. We are going to have breakouts and really would welcome all the questions. I would love to hear insights on your journey. What are your views on where the tax authorities are going? But looking forward to that further discussion. Thank you so much for your time. I hope you found it insightful, and looking forward to engage further during the course of today and tomorrow.